When Nvidia reports second quarter earnings Wednesday, Yahoo Finance will cover the earnings and the call live and special coverage, followed by an interview with CEO Jensen Huang. The report comes amid a flurry of moves between the company and the Trump administration, with Trump revoking his prior ban on the sale of chips to China, but his administration will now require the AI giant to pay the government a 15% cut of sales in China. Here with more, we got Gil Luria, DA Davidson, head of technology research. Gil, it is great to see you as always. So listen, Nvidia earnings on deck, Gil. I'm curious what you expect to hear. We did hear from those big tech giants recently, Gil, who said, listen, they're going to keep spending on AI CapEx. That should be good news for Jensen Huang's company, no?
It is good news. And more broadly speaking, the fact that the AI tools have gotten so good and that we're all using them so much more for more things tells us that we're going to need more compute. If we need more compute, we're going to need more data centers, we're going to need more GPUs. Big picture, that's all that's really important for NVIDIA, and that will be reflected in this quarter. There are complications around the relationship with China. That's not going to go away anytime soon. The news flow there is daily, but big picture is still very positive for NVIDIA.
You do mention, Gil, the sort of cross currents here with China, lots of headlines. If I'm an investor in NVIDIA, Gil, do I just have to simply bet, okay, CEO Jensen Huang, not only a gifted executive and an entrepreneur, technologist, but also I think has shown his chops as a true diplomat. Do I need to bet, Gil, that, listen, at the end of the day, ultimately he's going to find a way through this?
Yes, to some extent, but it's not even necessary. Again, the magnitude of demand right now is such that NVIDIA will continue to be able to grow even with a choppy Chinese market. We're not going to know how many chips they can sell into China anytime soon. We thought they couldn't sell H20s, and now they can, and now they have to pay a tax on that, and then the Chinese government is encouraging domestic companies not to buy it. Then we're going to get into conversation about the B30 and what the specs are going to be around that, and will they be able to sell that, and are there going to be tracking chips, and are the Chinese going to consider that backdoor? That drama isn't going away anytime soon. And so investors have to just incorporate that into their analysis, realize that China's going to have its ups and downs. The rest of the business is on a good trajectory, and you can tune out the noise from China. And then to your point, nobody's been able to maneuver this better than Jensen Huang so far, so you can put some trust in that as well.
Bob, bring you here as well. I'm just bigger picture, Bob, this NVIDIA print on Wednesday, how important is it for the broader AI trade and trend? How important is it for the market, Bob?
Well, I mean, most of the support to the earnings season, the outperformance relative to expectations, has been in the AI-related names here, and NVIDIA obviously wraps that up here for the second quarter. I think the big question is for NVIDIA is just how far can the hyperscalers go? You know, you've got hundreds of billions of dollars of investment going into building new data centers and buying chips. And the question on the other side is, are the users of this actually seeing enough of a benefit to make the economics of all of that investment work? It's one thing when everyone's racing for being the front runner. There's another thing whether all that investment is actually going to pay off in the end. And so I think that's sort of the question. The broader question here is, over a couple-year time frame, does all this investment pay off, or are we seeing a lot of speculative investment that's going to go to waste?
Gil, how do you answer that? I mean, all this AI spend, where is the ROI, Gil?
So the two levels, right? So let's use our favorite analogy, the gold analogy, right? So NVIDIA is making picks and shovels. Microsoft, Amazon, and Google are buying those picks and shovels and renting them out, right? And right now, there's a line around the corner to rent picks and shovels, which is to say, Microsoft, Amazon, and Google are getting an okay ROI. It's not great. It's not as good as the rest of their business, but it's okay. The true question, to Bob's point, is, are the gold diggers finding enough gold? And the answer to that right now is absolutely not. There's not enough incremental revenue and costs eliminated because of AI to justify this level of investment. But having said that, the way we're using these tools has such a promise in terms of driving productivity in such a huge way that it does look like if we continue on these paths and we all become so much more productive because of these tools, we will be able to justify this investment down the road, whether it's 2, 3, or 5 years down the road. The math right now from usage isn't working. Really, most of the usage is chat, and there's some software and maybe a little bit of elimination of customer service, but definitely not enough to justify the hundreds of billions of dollars we've invested to date. But if we can all become more productive, this becomes a driver of economic growth. In retrospect, we will be able to justify these investments.
Gil, heading into this print we just flashed on screen here, you're still on the sidelines. You got a neutral. How come, Gil?
Yeah, I mean, we came from a point earlier this year where we thought this would be the peak year for CapEx investment and that next year was going to be a decline. We no longer think that. We think that the development in the models over just even the last 6 or 9 months, the increased usage that's starting to manifest itself has justified the increase in Nvidia's stock price in this time frame. Right now, they're trading at the high end of their forward multiple historical range. The growth going forward is going to be somewhat capped by other factors, but we're definitely not as concerned as we were about the consumption peaking right now. We are more positive on Nvidia, but the valuation now probably reflects that properly.
Gil, always great to see you. Thank you for your time.
Will Nvidia earnings save the market rally? The AI chip giant reports its second quarter results after the close on Wednesday. And after last week's slight pullback in the tech trade, investors are looking for Nvidia to lift sentiment once again. The stock holds a massive weight in the S&P 500 index at nearly 8%. Joining me now is Maribel Lopez, the founder of Lopez Research. So Maribel, I mean, the biggest stock in this market, expectations obviously sky high. Can Nvidia live up to the hype once again?
I think this quarter we're going to see that Nvidia is still in the pole position as far as AI is concerned. They are really the only game in town for real money making in the AI infrastructure business. We saw all the cloud computing hyperscalers come out with really strong cloud and AI numbers, and that can only mean good things for Nvidia this quarter and frankly for several more quarters to come.
Now, one risk analysts have been pointing to is China. We heard from KeyBank last week that guidance for Nvidia may exclude H20 sales because license approvals, they haven't come through yet. So if Nvidia can't include China revenue, how much of a risk is that to the stock?
I think what we're saying with China is going to continue to be a wild card, but in general, the fundamentals for Nvidia for several quarters to come are quite strong. They're going to sell everything they can make, whether they sell it to China or they shift in production and decide to try to make more chips for what would be the US hyperscalers. So no matter what happens, Nvidia will sell everything that they can sell. The question, I think, is whether or not the market has overpriced optimism, and if there's even the slightest blip, if that will take an impact on the stock. And I think that is a legitimate risk because the enthusiasm in AI has been incredibly high, and even the slightest indication that there might be some crack in Nvidia will send it into a tail.
So when you look at the China revenue picture, if we can't include that, do you think that sets Nvidia up to maybe miss consensus estimates?
It has the opportunity, but frankly, I don't think China is the biggest issue. I'd be more concerned with if we saw a pullback in the hyperscalers in terms of their demand for the latest Blackwell chips. We also have some other competitive pressures that people don't talk a lot about, but we still see that AMD has the opportunity to try to undercut Nvidia in certain contracts moving forward. But we're just starting to see that build in now from the hyperscalers, so it could take several quarters for us to actually see that.
And you were just talking about the demand from the hyperscalers, which we saw play out this earnings season. I'm curious if you think that a lot of that story has been priced into shares. We are up over 30% since the start of the year.
It's almost hard to imagine that we could price in more in the shares from where Nvidia is right now. The enthusiasm has been at an all-time high. Having said that, there are very few alternatives if you really want to participate in a meaningful way in the AI game right now. They seem to be the picks and shovels for anybody that wants to build AI anywhere.
And if most of the optimism is priced in and most of the demand is priced in, where do you think the next leg of growth is going to come for someone like Nvidia?
Actually, the next leg of growth. So we've got a short term and a long term, and in the short term, it's keep on keeping on. This is the next several quarters. There has been a lag in enterprise demand for picking up these AI services. So the hyperscalers are building. The question is, are the enterprise buyers going to buy it? And that could be where we start to see some of the cracks in the short term of the AI space. In the longer run, there's some investments that NVIDIA has made that I think will be very important. They talk about it as physical AI is what we once knew as robotics, the advance of that. There's a lot of upside in manufacturing, in digital twins, in robotics for them as a longer game, but there might be a space in the middle where we don't see that quite pick up yet, and the enterprise demand is not quite picked up yet. So for several quarters, it looks like the buying trend is going to continue. They'll be in the mix. Clearly, they're driving the mix. And then the question is, do we actually have enough enterprise demand? And a lot of that will be based on how businesses feel customer sentiment in general is going for purchases and how much they're willing to invest ahead of that with an uncertain economic environment globally.
Mm-hmm. And what do you make of Jensen Huang's relationship with this administration? He's met with President Trump several times. It seems like he's trying to find a solution that appeases both the government and policy side along with the fundamentals of his company. Do you think that's an important piece of the puzzle when we look at NVIDIA's future success?
I think what's happening right now is that the US government is very interested in the chip trade, bringing that chip trade to the US. I think there's been a lot of negotiations that's been done, even with a 15% tariff placed on NVIDIA chips that go to China. They still get to sell those chips in China, so it's still good for them in that perspective. From the concept of the government right now, they're really very interested in creating a strong, secure US infrastructure. So I would say that any major corporation in tech should be working with the government to understand what their priorities are and how they can balance capitalism versus government intervention.
Mm-hmm. And speaking of this, the U.S. government just took a 10% stake in Intel as part of that push to secure more domestic chip making. But Intel, still in the middle of its turnaround, really lags the AI story relative to competitors. Does this government investment change your confidence in Intel moving forward?
So I think there's two things we have to look at here. Yes, is the answer to your initial question. I think the government investment in Intel actually makes it a little more secure for the buyers to think about, if I'm building something for 3 years from now, is Intel actually going to be a viable concern? I think that that actually has been taken off the table to some degree. That has nothing to do with whether or not Intel will manufacture the product that somebody wants to buy. That's a different question. But I also think this investment in Intel in some ways has been, shall we say, not positioned the way it actually is. If we look at the CHIPS Act, they were supposed to be awarded $7.8 billion in CHIPS Act, and then another $3.2 billion in the Department of Defense contract. That's roughly $11 billion. They had only received about $2.2 billion of that as of this month. So realistically, all that money that's being invested had already been earmarked to be invested in some manner, shape, or form. And the real trade was to say, you're going to give us 10% in the stock, which I think was meant to basically prop the stock up and give the overall buying populace confidence that Intel would be a going concern moving forward. And also to make sure that they have a stake in understanding who might be interested in investing in Intel moving forward.
Very interesting stuff. We'll have to continue to watch this space and see what happens. NVIDIA earnings on Wednesday. Maribel Lopez, thank you so much.
Thank you, Ali.
Nvidia is once again approaching record highs after an 8% pullback and just in time for earnings this week. In today's Stocks in Translation, we're taking a look at what tends to happen to the stock historically after reporting quarterly earnings. First, let's take a look at what would happen if you bought Nvidia just before the last earnings announcement and you held for various parts of time here. So we have 1 day, 1 week, 1 month, 1 quarter, and 1 year. So again, you're buying just before the announcement and then you're holding for a period of either a day here, and the median return is 3% for a day, 4% for a week, and 3% for a month. It's not great, and by the way, we're using median for some technical reasons here, but it's very similar to an average. And sometimes the announcement is going to send stocks up, and sometimes it's going to send it down, but when you average it out or median it all out, you don't really see outside outsized returns until you start holding for longer periods of time. And this is because Nvidia stock has tended to go up over long periods of time. So when you get to the 1 quarter period, you see median returns of 17%. But what really stands out here is the 1 year holding time, because then you can actually double your money plus. That's 117% return for a 1 year holding time. And this, by the way, goes back 10 years. Now, it's not just median returns that we're looking for. We also want to see what percentage of the time are we right. And so for the 1 day time period, we're right 63% of the time if we're buying. That means that you actually should have shorted about 37% of the time. Then for 1 week, it's 68%. 1 month, it's 60%. This might seem like it's decent because it's over 50%, but in my own personal work here, I like to see a return percentage positive of more than 70%, and that's because stocks tend to go up. So once again, when you get to the 1 quarter period, you're seeing percent positive returns 77% of the time, and then not surprisingly, we see the best with 1 year. That's 83% of the time you would see those positive returns. Now, we have one more chart here. This goes back all the way to the beginning of the century. And let's think of it this way. If you had bought and held for 1 year after each of these earnings reports, this would be your profit and loss over time. So again, you're only holding 1 year, and we've also smoothed this over 10 periods, which amounts to 2.5 years, 4 reports per year. What you can see is we've actually gone negative a few times, so buying and holding is not always the right strategy for at least for the 1 year time period, but starting in 2015 and going forward, we started seeing some outsized returns. And now you can see over the last 2.5 years, we are up over 150%. And of course, this can go down, but it's a good reminder that for buying a stock, and especially if you're not a market timer, best to hold for longer periods of time. Finally, I'm going to close with some statistics here. The first statistic here is derived from the options market. Now, if you're a trader, you want to know, and especially a short-term trader, you want to know how much the stock is expected to move right after the report into the close of filing day, keeping in mind that the announcement comes after the market close on Wednesday. So into Thursday's close, options market is predicting a move of 5.8%. Now, this doesn't tell you which way the direction it's going to go. Could go up, could go down, but that's the volatility, as we like to say. Now, here's what has actually happened over the last 2.5 years. It has gone up or down about 11.8%. So what you might notice is the options market is expecting less volatility than we've seen over the last 2.5 years. And this is because, and it's informed by this statistic right here, the average daily movement over the last 3 months, not including the last earnings report, but going back to late May, it's only been 2.6%. Volatility has really been reined in on the stock, and so expectations for volatility Wednesday into Thursday close, those have also come down. So putting it all together, Nvidia holders, you probably want to hold for that 1 year time or greater. And tune into the next Stocks and Translation podcast for more jargon-busting deep dives. New episodes could be found Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcast.